Hey there, it's Mike Wise at CMG Home Loans, and I'm coming up to you with a weekly mortgage update. A lot of magic has happened this week, and kind of wanted to go into some of those things with you. But first, let me start off with showing you my special that I have. I have a lender paid, a free lender paid buy down option for you. So that is the first year, 1-0 buy down. That means the first year is 1% lower than the existing note rate. So if I locked you in at 6.99 today, you would actually get a 5.99 interest rate for the first year. Why is that important? Because I think interest rates are going to go down over the next year. And within the next year, you'll be able to refinance probably at or below 5.99% on a 30-year fixed rate mortgage. So we're giving you the rate rebound product on this purchases right now. So what we offer you is this free 1-year buy down. It's a lender paid buy down. You do not have to pay for it. So it's a cool thing. Great product. The magic that happened this week. 818,000 jobs from March of 23 to March of 24 were wiped off the books, just taken away. The numbers that they have been reporting, and I've been telling you guys this for a long time, that something is wrong with the numbers. They actually wiped out 818,000 jobs. They're gone, down. And so the Fed, they're going to have to take this into consideration when they are looking at their policies over the next couple of months here as to what the jobs numbers really was. Now, the market, it really didn't respond to this 818,000 jobs that were gone because it's old news at this point in time. But we've been saying it's a downward revision of 28%. So the jobs, they were actually 174,000 jobs gained, and just a bad information that we've been getting from the government on the job numbers. So what are the odds here? The Fed moves on a rate cut. And just so you know, the actual rate cut does not have a direct correlation to mortgage rates. Inflation and employment are the two numbers that really drive the mortgage rates down. And so the Fed rates coming down, the Fed funds rate coming down, that does help, but it's not direct correlation. So September 18th, that's in just under 30 days from now. It's 100%. The Fed, they actually let the cut out of the bag in their minutes last week. They basically revealed that the vast majority of the Fed members observed that if the data continued to come in as expected, it would likely be appropriate to ease policy at the next meeting. So there's a 100% possibility of a 0.25% rate cut, and there's a possible 50 basis point rate cut at 25%. So there's a 1 in 4 chance that we would get a 50 basis point rate cut. And that's just before the election. After the election on November 7th, there's another 100% probability, and it's 39% probability that the rates will be 75 basis points lower than what they are today. So that's kind of where we stand as far as September and November and December. We think that they're going to be 100 basis points lower, or there's a 44% probability that they're going to be 100 basis points lower than they are today. So it's good news. Interest rates are coming down, and so what has the Fed done, or what is the Treasury market, the bond market done with these numbers? Well, we're still bouncing up. The rates went up last week, and then they started to come back this week. And so the yield on the 10-year Treasury has come down to 3.81%. And you can see that's been bumping up. There's a resistance line here at 100.79. Higher prices mean lower rates, and the lower yield actually means lower rates here. So we've been hitting against this 380 and bouncing off of that support level. We need to kind of get below that support level, and then we may see interest rates drop another 0.25% or so. So that's kind of where we stand with the yield. And then mortgage rates, they were down to 6.48 based on Mortgage Daily News out there. So that's down 10 basis points from where they were the week before. Keep in mind, these mortgage rates are for Fannie, Freddie, FHA, Fannie and Freddie loans. And then the jumbo rates are on the top right here, 6.68%, and 30-year and VAs 5.94, 5.95%. So rates are down. Good news for everybody, and that is good news for the housing market as well. For the realtors out there, I wanted to make sure that you saw this. This is a concessions cheat sheet for you guys. So just keep in mind, concessions are different than compensation. So I know that you're going through this NAR change with all your guidelines and all your forms and stuff. This is for just concessions. It does not have anything to do with compensation unless you're moving compensation to a concession, which you should not be doing in the first place. So this chart gives you like a conventional loan, primary and second home. If they put less than 10% down, they can have up to 3% seller concessions. 10 to 25% down, they can have 6%. And more than 25% down, they can have up to 9% in seller concessions. So this is a nice cheat sheet, conventional, FHA, and VA. So if you have any questions, give me a call on this. Real estate market, basically the existing home sales came out, and the sales, they rebounded kind of, sort of. July, the existing home sales, they rose 1.3% month over month, 2.5% year over year, to 3.95 million units. And it looks like the transaction activity may have bottomed out here, but the interest rates coming down, that's really kind of going to drive the market, and you'll see the existing home sales start to go up now as we go through this drop in the interest rates. So median sales price, $423,000, up 4.2% year over year. That's nationwide. That's not in California, so they take the whole nation to go through that. But the key point here is that it's up 4.2% year over year. For comparison's sake here, we wanted to show you just where the average 30-year fixed rate was. The low, we just hit a new low, the August 5th, so that was 6.34%, and the most recent peak was 8%. So we're down here, and I think that you're going to see them start to go down further. Wanted to show you the hottest housing markets in the nation, and so there's a link in my email if you want to see those. Ghana, Ohio. So really, it's the Midwest that is kind of driving this kind of, not insanity. It's driving the market very strong, and it's very quick sales. Lots of activity in the Midwest where there's more affordable pricing. So that's where we stand there. And that is all I have for you today. I will be available all weekend. You can call me, text me anytime you want to. Hopefully this was a good update, and I will see you next week.